What a difference a week makes, everybody. Thank you all for joining. This is the week where we'll touch on all the hot buttons that are on your mind over the last week. And boy, is it very different. A lot of concern about AI and resets and impact of other stuff that happened this week, like xAI on Tesla. We'll look at a couple of stocks. Like SMLR, like Square. Is it worth buying? How do you get access to SpaceX? What are the channels? We'll do some Arb trading with Bitcoin proxies. We'll look at some Bitcoin proxy HODLs. We'll look at SOLCasino staking. We'll look at Solana staking yields and so much more. A lot to get through. Oh, NVDA as well. How to hedge, when to hedge, and what the stock split impact will have. Let's go. And none of this is financial advice, just a guy on the internet, and hope his voice makes it. And all the questions come from the team on Patreon. Shout out to everybody there. Thank you all for coming. Without further ado, let's jump in so as not to waste your time. This is from David 4. Is xAI a risk for Tesla stock prices? Brilliant question. I think very heavily about this all the time. As you know, xAI just raised the biggest funding round from venture capitalists in the history of the planet. Valuation about $24 billion. They pulled in $6 billion, and it's not even closed yet. A lot of big Silicon Valley names: Andreessen Horowitz, Sequoia, Fidelity Management, place out of the Middle East too. Can't remember the name, but all big players with a lot of money threw a ton of cash at Elon Musk because he is the best capital allocator on the planet. If you want somebody to make you money, you give it to him. Everything he touches pretty much turns to gold. And I know Tesla's weak, but anyway, that's a separate issue. Let's talk about this and the strategery, not strategy, strategy maybe behind why xAI is being built outside. First of all, cutting edge xAI research. They want to maybe down the line integrate it into all of the Tesla technologies. I'll talk about that in a minute too. Also, by having a dedicated AI company, Musk can push the boundaries of AI research without constraints of a large established company like Tesla. Also, as we saw, he can raise capital all he wants and have independent growth. And again, funding it independently with the biggest round ever by a factor of 2 is pretty impressive. Also, resource allocation. He can ensure Tesla resources are not diverted from their core operations and plans, so they can handle that on the outside. And ultimately, synergy. Everything that Elon does synergizes. For example, a lot of the development for the new Roadster, Cybertruck come from things like SpaceX, Boring Company, building tunnels, partnership in Nevada between Tesla and tunnels in Las Vegas City, as well as Boring Company is building a tunnel right now in Giga, Texas. And also, so much more can be done. They're building a supercomputer, which will be the biggest in the world, which will help true advancements in AI and machine learning, and nonstop more. But the big question is, as you mentioned, what is the impact on Tesla stock? Why is this happening? So, as usual, I attach my tinfoil hat, and I try always put myself in the mind of others like Elon. What is he thinking? So this might be a little bit weird, but this is kind of why I think xAI is happening. So first of all, he is always 8 steps ahead, 8 years ahead. And after the activist judge in Delaware to reverse kind of what he should have been paid over the last 7 years, you can see the logic by what Elon is trying to do. He doesn't want to be beholden to, judges and stuff like that. So I believe he's developing xAI as the brain for Optimus on the outside for a core reason. If he creates the most perfect robot brain within Tesla, and activist judges and activist shareholders and activist funds decide, hey, you know what? We want control of this. And the government asked us to do that so we can create the best killer bots on the world to wage war against everybody. That's against Elon's philosophy. That's why he wants 25%. That's why he doesn't want to lose control. And that is probably why I believe he's developing this brain on the outside. But there's more. Okay, now, that's just the first part. We know his end game is 25% control of shares, again, to prevent governments from taking over Tesla and turning his robots into war machines. Very simple, very logical. I would feel the same way. But once this is out there and it creates a critical mass, Tesla, of course, will be able to partner with it, just like they're partnering with SpaceX and Boring Company, etc. But also, it could be a spin in. All right, Elon owns a chunk of xAI. That could ultimately be acquired by Tesla, bringing it in-house and getting him to where he needs to be, or at least giving him the control he needs to prevent crazy stuff from happening, like activist judges in Delaware. By the way, if you're not alarmed by that, it means you've got no interest in markets or free markets or capital markets, because that was the most dangerous thing I've seen in my years. It's absolutely shuddered my faith in the justice system to the ground, shook it to the ground, broke it, destroyed it. So anyway, that's just I'm not going to get around here, but I think ultimately it's going to be fine. It's going to be good. Tesla will not miss a beat. I shared on Patreon yesterday the impact from Morgan Stanley of all the different scenarios, pay a package approval or not, what it impact the stock price. It doesn't really matter. But this is Elon's hedge against tyranny, I believe. And yes, tyranny exists from the place you wouldn't expect it to come. Anyway, off my soapbox. Next question is from Mo. Why sell MicroStrategy before 2025 bear market if we believe in Bitcoin over the next 10 to 20 years? Why not hold like Buffett? Well, that is not the best thing to do at all. Let me explain with a simple chart as well that I've used before. This is cycles. Simple 4-year cycle. You have an asset, you put in $10,000 a year, you get a 30% return every year for 3 years, and then in the 4th year, you take a 40% loss. And this is not representative of MicroStrategy or Bitcoin, but it's pretty similar. All right. Now, the point is, if you ride it up and you hold through the bear, you're back to square one. But if you take profits at the appropriate time in an optimized manner and then buy back in lower, you can far increase your bags. Very important. Now, regarding MicroStrategy, there's nothing wrong with MicroStrategy, but back to your question, hold something for the next 20 years? No, never get married to any asset, ever. All right? We don't know when something's going to turn around or go to zero. That's why investing is a blood sport. And I can't stress this enough. People talk about holding, I don't know, company X or token Y forever. The pace of change in the world today is so extreme. We don't know what next year is going to look like. So never forget 10 years, 20 years into the future. Bitcoin probably will not exist. Definitely will not exist in its current form. So bear that in mind. And it's funny because I said this on the Raoul Pal video, which will be put, you'll see it anyway. But the thought is, it'll go up in a bull market, but it'll be crucified in the bear. They were my exact words in the video with Raoul last week. Okay, and I was talking about MicroStrategy. All right, you get amplified returns on the way up, and you get amplified drawdowns on the way down. So that's why you got to be very careful. And again, my entire focus for this whole year, 2024, has been around optimizing profit-taking strategies. We'll talk about one of those in a minute too, as we get to it. Next, this is actually one of them too. Learning Daily. I love that name. If the original target for NVIDIA was $1,100, what is the new target given the latest earnings and split news? How do similar stocks perform post-split? What a brilliant question. And yes, everybody needs to learn something new every single day. That should be your goal. If we stop learning, we become like a shark that stops moving. Not a good thing. First of all, the LILO model really helped identify this 1150 top and rebound, and that was the tool that I used. Also, watching things like mean reversion too. And I did hedge NVIDIA at 1145, 5 days ago, and I'm covered up to a price of $12.76, but also down to a price of about $1,000. And that was always my plan, but it did modify it up a little bit because of the 10-for-1 stock split. Now let's talk about the impact of stock splits. So and by the way, I don't know if I nailed the top. This thing could go to $1,500 tomorrow. But again, you're never going to go broke making profits. And hedging is a key part of what I always do too, considering we're talking about profit taking and not holding something forever, etc. Let's talk about this. My view on stock splits, and they've been great to me over the last few decades. But there's a couple of things you have to bear in mind. First of all, they're great for options traders. So NVIDIA, imagine you have one leap, one contract, okay? That becomes 10 contracts in a few days, 10. So you get a 10 for one. So if you calculate the time value you pay for that one leap contract, and then that splits 10 for one, obviously the amount of you're paying for time goes down. At the end of the day, though, it's still the same company, same valuation, same fundamentals, but splits have a weird effect on the human mind. So there is a thing called a pre-split run, and there's also a thing called a post-split duck. But remember, a stock split changes nothing but the number of shares. The business is the same. But also, there's a weird thing with market sentiment and perceived overvaluation. So for example, investors may perceive the post-split price as overvalued compared to the pre-split price. I know it doesn't make sense, but even though the intrinsic value of the company hasn't changed, the lower price per share may create a psychological effect where investors feel the stock is too expensive or too cheap relative to its historical price, like it's gone down. And again, human nature, trust me, I spent my life trying to figure it out. I can't. I do try though. Then profit taking. After a stock split, some investors may take the opportunity to sell shares to lock in profits, especially if the stock has been performing well leading up to the split, which is what it typically does. Then you have all sorts of other factors. You have an adjustment period. Some market participants may need some time to adjust to the new share structure. And in the immediate aftermath of a stock split can bring uncertainty, leading to price fluctuations, normally downwards. Also, this is a really weird thing, but I've noticed this too. There's lower institutional ownership after a stock split on a percentage basis because higher priced stocks tend to be favored by institutional investors because they can blow $1,000 on a share, whereas a retail investor likes to buy 100 shares, and 100 times 1,000 is a lot of money to put down. And after a split, the lower price might attract more retail investors and less institutional ownership, again, leading to a dip, leading to volatility, etc. And there's so much more I could go into, but it's easier for me to explain with a chart. And again, I've been looking at stock splits and playing stock splits for decades, and it's great with options. So let's look at Google. Google did a 20-for-1 stock split way back. By the way, this is the ATR model, and the red shadow is the bear market for stocks, technology stocks. We went through a rough period last time. There was lots of layoffs. There was technically a recession, 2 quarters of negative GDP growth. But the government won't really tell you that. But here we did have a pre-split run, the green arrow going up to the split, and then the post-split duck. The price falls. And then after about, depends, 3 months, 6 months, whatever, there is the recovery. And that's Google. Google did a 20-for-1. NVIDIA is doing a 10-for-1. So it's pretty similar. But guess what also did something very similar? Amazon. Again, same bear market. We had the pre-split run, then the post-split duck, and then the post-split recovery. And I could point to hundreds of charts over the last 30 years that have done the same thing. Okay, people get excited up to the split. They want to hold the stock to get that 10 shares for every 1 share. And then after, it's like nothing happens. And then people say, okay, I'm out. Boom. And move on to something else. Okay, so that's what happens. Now, it is very important as well to note the following when you do this. I always say keep your head out the window, keep your eye on the macro as to what's going on. Google and Amazon were hit by a recession and layoffs at the same time. But most stocks do the same type of thing. Pre-split run, post-split duck. And again, witnessed for a long time. Check it out yourself. Pull up any stock that has done this. Even Tesla. They've done a couple of splits since 2017 as well. Next question is from Dan11. Another stock question. Square Block Inc. Should we buy? I've been discussing this with your IA Patreon community about wanting your professional opinion. So this is an interesting one, and this was one of the names that I purchased during the March 2020 C19 crash. One of them, and it did very, very well. But this also ties back into the question earlier regarding MicroStrategy, should you hold? Let's look at a couple of things. Let's break it down first. Let's look at the revenue and earnings growth out to 2027. And they both look pretty good, especially revenue growth. They will continue to grow up to nearly $31 billion. And earnings about $2.5 billion. So yes, they're trundling along. But when back in March 2020, Square is a much smaller company. The bigger a company gets, the harder it is to make these exponential moves. Now let's look at the growth, another view of the growth. This is historic growth on a quarterly basis. Revenue growing, net income really turning positive over the last 2 quarters, which is good to see. EBITDA, very positive. Debt is okay. It's a little high for my liking, but the cash position is good. There's also something else that they're doing. They will be allocating 10% of profits to Bitcoin, and I like that too. We'll get back to that in a minute. Now, there is something I do not like. This is the ugly part. Egregious stock-based compensation. They are the pink bars here. Last quarter, $311 million stock-based compensation. All right, that was twice what they made in net income in the previous quarter. So they are lining their pockets, and I do not like that at all. Now, if the company is making a ton of money, that's fine. Also, when you compare this stock-based compensation to PayPal do about a quarter of what they do. Also, we know there's a lot of things we can pull in here from experience and history. We know that they have, I believe, far too many employees, 13,000 employees. It's just going up, up, up all the time, especially massive growth spurt 2020 to 2023. Huge growth. I mean, we're talking 6xing the number of staff, which is extreme. But fortunately, Jack Dorsey, who also used to run Twitter before Elon took over, we know what happened there. And Jack Dorsey is a key player at Square as well. So too many employees, think Elon and think X Twitter. And this is from PMS or Us. PMs or Us. Does anybody remember when Elon cut 90% of Twitter's workforce and people saying Twitter would implode? How that working out? Nope. In fact, what they were able to do in 1 year is do more development, more features and functions than they did in the previous 5 years with 10% of the staff. So the point is, I believe they need to get more effective, more efficient, and that could really help drive up this green line here at the bottom, which would increase the valuation of the company. Now, let's look at the ATR. Now, this goes back to the question regarding MicroStrategy, why you sell. So if you look at here, we can see that Square was nearly a $300 stock not too long ago. Late 2021, it was $300. And this is why. I remember I got into Square, I think, $20 or $30. And then I always have an end-of-year process where I clean my shelves. I identify things and say, would I buy it now today at this price? If the answer is no, say bye-bye and take the hit on taxes. So you never go broke paying taxes too. No, dropping a lot of bombs here. Very important. Don't let taxes prevent you from selling or taking profits. Although sometimes it happens to be for short-term capital gains. But anyway, if we look at the Square stock, the block stock on ATR model, you can see very clear signal to sell and get out at level 6. And we are now, believe it or not, at level 1 still. Now, there is a buy signal on the ATR on the daily. And what's also weird about this, too, very high win rate at 95%. But this is a stock that doesn't work on trend. It works on deviation from the mean. So remember, if you are using ATR, always toggle those, always watch the back test. It's key. Things like FX, commodities work better on deviation, and so does this actual stock itself. So we are now around $60. The question is it worth it? Ta-da! Conclusion time. First of all, I do like the growth. I like the earnings growth. I like the fact that 10% of profits are going into Bitcoin. I like their Bitcoin HODL. I do believe fair value is somewhere between $80 and $100. And at $60 now, yeah, there's upside there. But what I don't like is a huge staff, and I don't like the stock-based compensation. I think it's ridiculous, especially when you compare it to other companies. So is it worth a flutter? Maybe. Do I think they're faster horses? Yes. Would I touch it? No. Maybe if it fell to like 40 or 50, perhaps, but not at this level. I like things that'll do at least 2 or 3x for me, and I need it to happen within a year's time frame, or else I'm not interested. So that's my analysis of the Square. By the way, I have another video I did of Square versus PayPal. It was like a face-off. I did it late last year or early this year, and actually PayPal won. So we'll see. Now, next question is from Mellowbag. What are your thoughts on buying Ark Venture Fund shares through Titan Investments? It's the only way I've seen to invest in private equity AI companies like OpenAI and SpaceX for non-accredited investors. It has a 2.9% fee. Is it worth it? So for a long time now, a lot of people want to get their hands on xAI. Sorry, SpaceX. I'm getting xAI and SpaceX all confused. SpaceX, we know, again, as I said before, kick this off with people know who the best capital allocator is on the planet, and we know space is the future, and we know Starlink is huge. It's providing internet to the world, and soon it'll provide mobile communications to the world too, which will probably make Elon Musk even more popular. He don't just have the media companies and the car companies and the oil companies coming after him, but he'll also have the telco companies too. Anyway, can you just imagine the lobbying in DC? Moving on from there, let's look at one of the Ark Venture Fund. This one is roughly about 5% in SpaceX. And there's a couple of things I don't like about this. One, I don't like too much spread. It makes no sense holding 60 names and seeing what'll stick. Also, some of the names in here I would not touch. I won't even mention what they are, but they're on the left-hand side. I don't think they are good investments. They do have Anthropic, which is good, but the SpaceX, as using this fund as an exposure to it, 5.4% is not enough. So I wouldn't, it's not, you're going to be drugged down by a lot of the losers in this bag. Even if SpaceX does a 3x, 5x, 10x, you're not going to see much impact here because it's such a small shareholding. Now, Ark do have another fund. It's Ark Space Exploration and Innovation ETF. And SpaceX doesn't even crack the 2% here. You know, they've got things like Teradyne and Trimble and Iridium, which I thought died a couple of years ago. Amazon's in there. Well, I don't know. Yeah, it doesn't work. I say hard pass. Now, there was a time where if you had $1 million, you could get exposure to SpaceX, but I don't know where that stands right now. I would look for a better proxy with a much higher concentration. We'd want to be at least a fund with about 30% holding a SpaceX to be worthwhile investing in and eating that 2.9% management fee. Hope that helps. Next question is from Milo. And this is a deep question. I thought about this question now for 3 days. And it's what I've been thinking about for 3 years nearly, since November 2022, when I realized, okay, AI is very real and it's going to change the world very quickly. The alarm bells went off in my little mind. But Milo, you've got a great question here. Which comes first, a limitless GDP economy driven by AI and bots, or a great reset of the world's economies, followed by central bank digital currencies and cryptocurrencies driven by relentless currency debasement, debt, and inflation? There's a lot to this, and let me try tackle it. And I want to preface this with, I am an optimistic guy, so if I say this type of stuff, anyway, you'll see what I mean in a second. First of all, there is this dream that AI and robots will bring about this huge abundance. Everybody will be rich. Everybody will be driving Lambos on the beach, drinking cocktails, having mani-pedis, whatever, done by robots. I don't know what. But that is not the vision of the future that I believe in. Many do, but I go counter to this because of this. First of all, I do believe AI and robots will significantly increase productivity and efficiency and effectiveness, leading to vast wealth creation. Yes, I do believe that. However, this wealth creation will not be distributed evenly. Okay, the owners and developers of AI technology will see their wealth grow exponentially. And this is, and while others will not benefit at all. And there'll also be huge wealth disparities in the future. I envision a 3-tier society. You've got the bot and the data owners. Remember, data is like oil. The future is all about data, which is oil. It's the way you feed AI engines, you feed them data. Then the 2nd-tier society will be those that embraced AI, and they'll do okay. That'll be the new middle class. And then the majority of people will be plebs on universal basic income. And I know that sounds really scary, but as I've been stressing here on this channel, embrace it. Embrace or die. I use that term a lot because that's just the way of the world. People need to embrace AI. It is going to change everything radically. Okay? Radically, and way sooner than you think. So the other aspect too is not only massive job displacement, because bots and AI will be able to do pretty much everything that a human can do, but better, cheaper, faster. Average wages will fall to $10 and then ultimately to $1. And that will not help people who are competing with robots to work. And again, I have to stress as well, those that have the skills to work with AI will do well. Those that don't will not. So take this as a wake-up call. If you've got kids in school, get them to embrace AI as quickly as possible. Data control is also so important. AI and bots will also control a vast amount of data, and this data can be used for a ton of purposes, including, who knows, influencing public opinion, shaping economic trends, manipulating political outcomes. I mean, there's lots of scary stuff in the future. There's no doubt about that. And this will lead to a concentration of power among a few small organizations. There's also privacy concerns I don't need to go into, ethical concerns which I won't touch on, but that's just scratching the surface of how I see this future. It will not be everybody get rich and happy, okay? So don't believe that for a second. I know there's a lot of people out there preaching it. Perfect world of unicorns and rainbows. No. For those that own the data and own the bots and own the machines and own the AI, the supercomputers, yes. Those that embrace it, position themselves, will make it. The rest are in big trouble. And that's deeply concerning for me. Now, this is also kind of doubling down on that view of the dark side. And sorry, this is long-winded, but it's so important. Job displacement, as I covered before, they will. AI and bots are already, well, AI is making organizations 3 to 5 times more efficient, which means they can do, if they had 100 employees before, now they just need 20. You have venture capital firms now funding companies where they used to give them $5 to $10 million Series A. They're just giving them a few $100,000 because with AI, they can do a lot more. They can achieve a lot more. They don't need $5 million to write code anymore. The machines will do it for them. There will be a lot of increased inequality. The technological advancements may not and will not eliminate the disparity between the haves and the have-nots, but there will be more have-nots, okay? There will be, because people don't have jobs, there'll be a loss of fulfillment, a rise in addictions, there'll be more human isolation, there'll be mental health issues, and work ethic will deteriorate and people will kind of give up the ghost. It's pretty scary. Again, embrace or die. It sounds really extreme, but I've seen what has happened in a short window of time, and things are only going to get a lot faster as well as we go forward. Now, back to the question 2. That's the AI part. The debt part, the Great Reset part is here. I shared this in the macro video on Friday. Again, the US, it took 220 years to add 11 trillion in debt. And then just over the last 4 years, they added another 11 trillion in debt. So it's bonkers. Now we're at 35 trillion. 35 trillion, which can never be repaid. Never. Fiat is toilet paper. Let me be perfectly clear. It is toilet paper. Gen Z have one chance. That's why I make videos. Embrace Bitcoin, because If you look at the world debt, not just the US, world debt is $230 trillion. That's 174 times the Bitcoin market cap, which is crazy. So fiat money, and I also covered how inflation actually steals your labor too last Friday. So check that out. So conclusion, what comes first? And again, sorry if I threw a bucket of cold water on everybody, but it's important to know what's coming. It's hard to say which comes first. However, debt and growth, deficit growth will lead to some sort of reset. That reset, I don't know if it's going to happen in the next 3 years or 8 years, but somewhere in that window it's going to happen. But I do think the bot AI revolution will happen sooner. But maybe they could both happen at the same time. The bots are coming. Both could be here in 3 years or less. Bots definitely will be here in 3 years. And they'll be making massive changes to our society. And that could trigger a lot of great resets. We do know places like China are printing money like there's no tomorrow. Other central banks around the world will catch up to compete with China. It'll become a race to the bottom, literally, of fiat printing. And it's only just begun. And just look at this chart. If that doesn't alarm you, I don't know what will. So for those who think the days of high inflation are over, they have only just begun, ladies and gentlemen. So let's get on to some brighter news and how we make it out of this crazy hellhole. Anyway, crazy cat. Can we use the Arb Cloud with new Bitcoin proxies such as SMLR? And if so, how do we configure the settings? Great question, because I hadn't configured mine already for SMLR. So first of all, this is the SMLR, which is Semler Scientific in Santa Clara, California. They decided to allocate a big portion of their treasury to Bitcoin, following the MicroStrategy playbook, alongside Metaplanet or Metaplex in Japan as well, who are doing the same thing. But remember, we are 1, 2, 3, 4 days into this. Okay, so it's a very, very short window of time. And let's break it down how it looks. First thing you do is you calculate how many Bitcoin they own. They own 581 Bitcoin, unless they bought more in the last day or so. Their intrinsic value for the business pre-acquisition was $159 million. And again, the Bitcoin HODL is 581, market cap, intrinsic value before acquisition, 158.7 million, round up to 159 million. Then you take that, you plug it into your Arb Cloud. You've got the amount locked, which is the amount of Bitcoin. You enter 581 there. You enter the intrinsic value. By the way, this is in billions, which means you put in 0.159, not 158 billion, 0.159 billion. And then you get your chart. And here you can see the way it typically works. Again, we only have 3 or 4 days of history, but the way the Arb Cloud works is you swap between assets. You swap between Bitcoin and the stock. In the first spike at the top there, you can see the price of SMLR went above the cloud. That means it was at a crazy valuation, and that's typically the frenzy that happens. And that's when you swap. Well, first of all, you get into the position first, and I made a Patreon post on that. I did not buy SMLR myself because I only trade options, and I don't buy stocks very rarely. So I didn't buy this one, but I would have if they had options. Now, you sell, when it does go above the cloud like it is there, you sell SMLR for Bitcoin above the cloud. And then when you get below the cloud, you see the way it went spiked up and then it spiked down. That's the Arb opportunity. You sell Bitcoin for SMLR below the cloud. You wait for it to pop above the cloud again and you do the same thing. You wash, you rinse, and you repeat. You can also do this if you have a brokerage account like Fidelity or Schwab or 401k or something like this, or tax-free account in the UK or Australia. You can actually buy a spot ETF instead of buying spot Bitcoin. So you can swap between SMLR and IBIT or FBTC or something like that. So hope that helps. Now, the other question, which you didn't ask, but maybe there are other Bitcoin proxies. So I pulled this from Bitcoin Treasuries and I sorted it about who has the highest percentage of Bitcoin as a percentage of market cap. And BIGG, Digital Assets, does 85.85%, Hut 8 Mining, nearly 80%, Bitcoin Group, SE, etc. You can see all these names. But then I saw Hive Digital, 66.82% Bitcoin. That didn't seem right to me. So remember, sometimes websites, just like the media, are not correct. So Bitcoin Treasuries has a problem here. I pulled up my miner model, and these are the large HODLs just for Bitcoin miners. And you can see here the HUT is 58.39% versus 79.2%. So their math is wrong. Then CleanSpark, 10.8%. And that's the next big one. HUT, Hive, 42.24%, and not 66.82%. So they're slightly off, slightly out of date. But if they have a HODL of near 50%, yes, you can arb it. And it's very effective as well. Next question from James Hub. Is the native staking yield of Solana likely to decrease over time as Solana dominance increases with potential increased staking participation? The answer is yes. They will fall over time. Now, the current inflation rate for Solana right now as we speak is about 5.251%, and this will decrease by 15% each year until it reaches 1.5%. And to help reduce inflation, of course, 50% of the transaction fees are burned, which lowers the total supply. And the other 50% of the fees go to the validator who process the transaction as a reward. And then they give part of those fees to the people that stake with those validators. It's a very, very simple model. But there's a twist, and this is what you need to know about. Obviously, there is a scenario where you can make more rewards if there's more adoption, more fees, more transactions. Let's break this down. So there was a change. The Solana community voted to allocate, and the vote was done by validators, by the way, to allocate 100% of priority fees to network validators, making it very lucrative for network validators to be a validator on Solana. Also, and by the way, they still have a risk. If everybody leaves the Solana chain and goes somewhere else, these validators are left with all that hardware and all the infra without being able to generate a return on it. So there is a risk of being a validator. But getting 100% of priority fees was actually supported by people like Toli as well. I want to make that very clear. And this is a change in the previous system. Now, the way the old fees were split between rewarding validators and the token burning mechanism is good, but the new structure also allows increase in rewards for the validators and by extension to those that stake with those validators. Now, this is where the big twist comes. Can this scenario happen? Let me explain how and yes. Mert, friend of the channel, he was a holdout and he wasn't sure that Firedancer could bring Solana to 1 million TPS. Now he has seen the results. Now he believes it is not only possible, but it's possible that it could happen pretty soon, which is huge. And remember, Firedancer is the C++ new code base for validators. It's a very efficient code. It is more performant than the previous Rust-based versions. And for those of you who know, things like Bitcoin are written on C++, PayPal was written on C++, Google written on C++. Again, all the most scalable systems in the world are written on this code base, which is old, tricky to code in, but very, very scalable. And Firedancer, as a new validator client, could diversify the network, increasing the Nakamoto coefficient, making it much more decentralized. And it would also, of course, lower the risk of a single bug affecting the entire system. And this could bring, early testing means this one core could handle, one GPU core could handle up to 1 million transactions per second. So again, big change is coming. And if this does get off the ground, people ask when, maybe end of this year, early 2025. I think it could be released at breakpoint, or at least very close to that point. That could be a complete game changer for all things blockchain. And then there already is, but there will be only one true black hole sun, as I call it. Hope that helps. We'll see. But Mert was on the channel and he said to me live, he said, I said, are we going to get to 1 million TPS at Firedancer? He said, no. But 20 hours ago, he said, yep, looks like, and he knows he's directly tied to the whole team at Solana too. So I hope that helps. Speaking of staking, this question came from RocketBotX. Another bot. Oh my God. Now that you've swapped PYTH for SCS, it would be great if you could show us a safe way to stake SCS. The SOLCasino website says that SCS can be staked for an APR of 21% earned in USDC. Now, it seems too good to be true. Is this safe? Well, staking, there's always a risk to staking. But staking on Sol is a little less risky. But there are some issues you need to be aware of. And I own Solana. I own SOLCasino as well. But I do not stake it. And that's because I don't do NFTs. Now, because I don't know, I never understood NFTs. A little bit, not enough. But anyway, yes, staking is safe. But to stake your SOLCasino, you do need to buy a SOLCasino NFT. Then you need to stake your NFT. And then after it, for example, a floor bear, you can earn about 1,644 SCS tokens per day. So it's about $18 a day. And maybe a little more depending on the actual price. And you can restake it automatically and you get compound interest on that too, which is very powerful, by the way. It's a miracle of the world, as I've covered before. But there is another question. Not only do you have to buy the NFT, but it costs 2% to stake and another 2% to unstake. So you pay a tax 2% on the way in, 2% on the way out. These are the SOLCasino NFTs. And again, sorted by the cheapest, 22 Sol, which is north of $3,000 per NFT. So there is a little bit of a hill to climb before you can stake it. But, the return is extremely good at the same time. Not staking advice, by the way. So hope that helps. And best part of the week, before I open up some questions from the audience here. This donation was in honor of Doc Intern. Shout out to Doc Intern. He's our Patreon member, and he always makes appearances in YouTube live chat. Thank you, Doc Intern. This is Doc the Manatee, and is in the Blue Spring State Park in Florida, and he's been there every winter since 1976. He lives up to his name by being a companion to injured manatees, but he's also a fan of socializing with the ladies, apparently. So shout out to Doc Intern and Doc Manatee, and all the doctors we have in the audience as well, like Sanjay and Chewy and everybody else. So thank you all for being here. Also, DCA Live every Monday, 7:30 a.m. Pacific, sometimes 7:40. And I'll be on with Mando and CTO. And Mando will be moderating tomorrow. He'll be asking all the hard questions. And don't forget to like as well. Thank you all for coming. Let's do some questions, and I hope you enjoyed the show. And I'm going to drink my large coffee while we go. There he is, Doc Intern again. And by the way, thank you to the mods in the chat for being here. Doc Intern, my 401k has done extremely well, being 95% of MicroStrategy. Want to switch some to Tesla. Struggling with timing. I don't want to sell MicroStrategy too soon, but also don't want to miss a Tesla run-up. Current plan is to flip 10% of MicroStrategy into Tesla as soon as either 1, MicroStrategy goes up 15%, or 2, Tesla is greater than $195, or 3, 2 to 3 days before the Cybercab unveil. Thoughts? These are things I think about all the time, and I like the way you're thinking. Smart fellow indeed. So yeah, the best way to do this is to look at the pair chart and look at layers. And also, when you're dealing with MicroStrategy, you have to look at what Bitcoin is doing. And I know Bitcoin right now is kind of sucky, a little bit of a pump this morning, and then a little bit dip right down again. It went from 67.6 to what it hit 68.4 and back to 67.6. But it'll pop again later tonight. It always does, Sunday nights. So we'll think about one of the things I will be doing, and I kind of shared yesterday kind of my Bitcoin plan within Patreon, where I see it going for the next 45 days. And then after that, hold off for now. I do think we have until August before the fireworks go off. We do have the comp plan approval or denial in about 14 days. That'll be big too for Tesla. I think if it gets approved, you could see a little bit of a bump, but not too much of a bump as well, because it should be a little bit priced in. But the tailwinds for Tesla will really hit in 2025, not this year. Now, it's so tricky to say, but I will share. I don't want to answer this right now because it's too tricky, but I promise you, I am looking at this extremely intently myself, mapping out layers. I'm creating this monster model of a huge composite score of Bitcoin pricing models, and then mapping that back to layers, and then an optimal layering out profit-taking strategy with the team here. That's a big part of my focus. So stay tuned for that. Don't fret now. But if you want, since you are so heavy MicroStrategy that you are irresponsibly long, I thought I was heavy at about 40%, but you are, it probably is good to move a little bit for sure. I like your MicroStrategy pop up 15%. That may not happen for another 40 to 45 days as well. So hang tight. I think you have time. Say 2 to 6 weeks, sit tight, and then watch some of the stuff that I share as well with the community. But that, again, I like the way you think. Thank you, Doc Intern, and thank you as well for Doc out there in Florida. And I hate to not give a very specific answer, but it's a tricky, tricky question. But I am on top of it, trust me. I am Colt. What is some life advice you would give to someone in their 30s? Try work for yourself. Most important thing. Try not be I hate using the term, but a wage slave. If you have the energy and the drive and you are a top performer in your company, get out and do something yourself. That would be the biggest advice. I personally spent way too much time working for others. I should have been on my own from a very young age. That was, was a mistake. But anyway, it worked out fine. But that's what somebody in the 30s, don't just be another number in an organization. If you are a top performer and you have the hunger and dedication to work really hard 7 days a week, get out and do something yourself that you also enjoy doing. That is your passion. That would be the advice to somebody young today. And it's hard. And it's very hard to get started. But once you get started, I know one guy, he's a friend, and he kind of left the rat race and he set up an insurance agency, like insurance. And now he is well set. But it took him years to get things off the ground, and now he's well off the ground. So think about that. Richard Duncan, for the furry friends, thank you so much. Y1504 for the horses from last Sunday. Awesome. And thank you as well for your super sticker. Just as my voice is about to die, Solo YOLO 2030, Sir Winston, Glenn Joe, Andy, Bert Frank, Forrest M, Signal 103, Cryptorilla, Theo Zoo, KN is one. And from Jimmy Neal, question: have you created a step-by-step options infographic of your reliable favorite method? No, but I can do that. I will do that for the community, Jimmy. I have a very strict set of options rules that I obey, and they prove to minimize risk and optimize returns. So yes, I will do that, Kate. Jimmy, thank you so much. And Wolfman Wreckable and Katie, thank you again. Thank you as well to the mods in the chat. Thank you, Sean Donnelly and K8 and everybody who's here. Wolfman Wreckable, what a cool name. I don't know if T&D's Tesla is here, but if she is, say hi. That's all. Thanks, everybody. Have a great Sunday, and I'll see you all tomorrow morning on DCA. Have a good night. Bye-bye.